talking to a particular company, Somany Ceramics. That stock has rallied quite significantly from its 52-week low. It's up around 63% from its 52-week low and 35% in the past 6 months odd. However, its 52-week high was over 800 odd rupees, so there is still some way to go to get back to those levels. Nonetheless, we do have with us Abhishek Somany, who is the MD and CEO of the company, joining in to discuss demand outlook as well as key parameters for FY24. Abhishek, hi, welcome to the show. If you could just start by giving us a sense in terms of what volume growth is looking like in this quarter, because in the previous quarter, I think you achieved a volume growth of around 8 odd %. What is it tracking at in this quarter?
So, it is still muted. The growth hasn't come back. We've had not so bad a July, but August was pretty down. So there is pressure on the market as far as volume is concerned. However, we are very hopeful that H2 should pick up. So I think the volume growth should be in line with the Q1 or maybe slightly better than Q1, but it's not going to be significantly better. There has been pressure in most markets. So there is no specific market where there is a slowdown. It's just across the board.
Okay. Can you just highlight to us what are the key reasons for this demand slowdown?
So that's something which is perplexing us because we've been speaking to large dealers, traders, etc. There isn't any specific reason. Some people say it's rain, some people say it's inflationary pressures, but there's no specific reason as to why the slowdown. And like I said, there's no specific area of India where there is a slowdown. It's just across the board. So on one end, it gives us solace that, it's a general scenario and it would pick up. And on the other end, there is no answer specifically as to why the slowdown is.
Oh, there's no answer specifically as to why the slowdown is. All right. So, talking, Abhishek, sorry?
Which is actually good because, there's no specific excuse people are making from, festive season to rains to something or the other. People keep making excuses.
No, I take your point. And of course, there's, post-COVID, there was this big boom, right? And now I think things are sort of normalizing a bit. But you saw an 8% growth, a volume growth in Q1. Of FY24, if I'm not wrong. What is the outlook for the next couple of quarters? When you talk about slowdown, do you think that the volume growth will continue to be in low single digits? Or, what is your expectation? No,
it'll be high single digits. And for us, it's hopefully with H2 and our production capacity, which we've increased, which we will start utilizing that. We're still very confident of a double-digit growth. So these are all momentary things. Please don't forget that at the end of the day, real estate is back with a bang. And a lot of the real estate got launched last year will start showing results for us because we're the last product to go in any real estate consumption. So Q3, Q4 onwards, things should start looking better. But I'm not so worried. It's just that, we've expanded so much capacity. We're eager to use that. Therefore, we are getting, a little more perturbed about the slowdown. But otherwise, it's not something we haven't seen in the past. It's okay. It's nothing which is super worrying. Because on the other hand, the receivables are very good. We've shaved off a couple of days on receivables. The balance sheet is strong. So it's not really perturbing us very much.
Okay, so there is a slowdown, but it's not too much of a worry at the moment. And I take your point, there are so many real estate projects coming up. So I'm sure, in that space, you'll get a lot of business. But there is sanitary ware that you do. There are also bath fittings, right? And in that segment, you've been doing very well. Given that there is this big real estate boom and you're present in this bath fitting segment, what kind of growth are you looking at there over the next 1 to 2 years?
In fact, we're not very happy with the bathware and bath fitting growth because at the end of the day, when people look at Somany, the top of mind recall is tile. Therefore, there's a long way to go in bath fitting and sanitary ware. We're doing actually better. Maybe the growth seems smaller, but we're actually doing better in the tile segment. And also, the other big plus point in the tile segment is that our major cost, which is gas, is now quite under control. Last year was super volatile. It went from 40 to 90 and is almost back to 40. So that's a big positive for us. Sanitary ware and bath fitting, of course, with new housing coming up, that is going to be a large positive. I do want to point out that in tiles, 80% of our product goes into retail. As far as bathware is concerned, a good 50% still goes to projects. So we're really looking forward to a lot of projects coming up and spurring the bathware and sanitary ware.
Okay, so you are expecting stability in terms of gas prices. Your earlier interaction with us in June had given us an indication, you had given us an indication that your margins for FY24 would be between 9.5 to 10 odd %. Are you still sticking back by that guidance? Or because of the slowdown in demand, you have to take price cuts to sort of boost volumes?
No, so no, I would like to stick with that guidance, provided volume kicks back in H2, and we're very confident that it should. So it would be too conservative for me to today say that we want to pull down on the guidance. Let's see what happens in Q3, and that's when we would be able to contain and comment on that. But today, I think we're fairly positive that H2 should be much better than H1, and therefore the margin should be in that range, specifically because the gas is largely under control. If that is going to be a surprise, then obviously we don't know what will happen.
But are you contemplating price cuts in order to boost demand? Is that situation here?
Not really. We are giving some SOPs to dealers in terms of some schemes, etc. But there's not been a need for a major price cut because this slowdown, considering that our receivables are good, which means that the dealer is buying only as much as he wants. So just by cutting pricing, I don't think he's going to buy more because he's also worried about his inventory. So I don't think there's a call for a huge price cut. A couple of % here and there gets made up, when the volume kicks in. So.
Okay. The other concern, I don't know if it's a concern, but at least it's something to think about, is what happens with your debt, right? Because you're currently sitting on around 500 crores of debt. If this slowdown persists, I mean, not a slowdown, but if a slower growth persists, then at some point, could it put a little bit of pressure on your balance sheet? Are you okay with higher debt? If yes, what would the debt equity ratio be for you that you're comfortable with?
No, there's a correction there. We're not sitting on that kind of debt. This is all channel financing. Therefore, all the debt is with our channel partners. They pay the interest. The debt is on them. The standalone debt is zero. We're net debt negative. In fact, we do not use our working capital. The total debt in terms of long-term debt amongst all our joint venture companies totals approximately 200 crores. The rest of it is all channel financing, which is not on our books. It is the headache of our channel partners. So really the debt doesn't bother us right now.
Okay, all right. Abhishek, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Somany Ceramics, a bit cautious with regards to demand. They are seeing some amount of slowdown in demand, but they're not currently revising their guidance in terms of volumes as well as in terms of margins. They're hoping that it should probably normalize. We'll take a short break, but up next we'll be talking to Abneesh Roy, the Executive Director at Nuvama Institutional Equities, to discuss what brokerages are saying about Hindustan Unilever. Stay tuned.